Lastly, we take a look at company valuations.
Right, so that's what I was wondering
There was a
into
big
a
grand
moment
pause
ago.
there. Yes, company valuations.
Very different. So you've got Capitec still flying high on a relatively high price-to-earnings ratio, but delivering so far anyway what people want. Then you've got African Bank, which is on a much higher dividend yield because it's got a sort of more mature business model in this space.
Don't give away what the trade of the day
but
is in this
currently
conversation.
just absolutely hammered down after this enormous share price fall that we saw in the charts.
Let's look at your exposure or your client's exposure, Lavan, on Capitec and Able, just as a precursor to the valuation discussion.
Many people had exposure to Able and favored that sort of exposure above Capitec. Bear in mind, Able had come out with very good results recently. Trading updates in November gave us an indication, 25% thereof increase in earnings. There was a lot of attraction draw to Able as a portfolio counter, as a speculative play for single stock futures. Capitec, on the other hand, had seen some dilution on the rights issue, and people were still mustering around as to how to value it.
And Capitec keeps delivering on their numbers. You've
Capitec
got to give Rian stuff in that.
This year, with the nice trading updates, got to 220 Rand a share. It's since fallen back to 200, so that's the 10% slump. So they look quite good, but there's just a little bit of a worry in my head that maybe with all of the other deteriorating commentary, that Capitec's just playing catch-up, and that there may be a little bit of anxiety still to come from that source.
You mean following the downside that we've seen in Able?
Yeah, so they fell with the Able downturn, but I just think that Capitec hasn't really, in a sense, had opportunity necessarily to take a careful look at its book in light of the comments from its competitors.
Do you think there could be more downside in store for Capitec?
I think possibly as news starts to filter through about earnings forecasts, indications of where their financials are going to sit, it is likely...
Gentlemen, let me just remind you, at the beginning of this show, you both said no problem in terms of the credit, the unsecured lending bubble. You're now starting to say to me, listen, hang on, there could be more bad news flow. Where are we going?
I still believe there is no bubble. I think it's a sustainable part of the financial services sector in South Africa.
Okay, well, I'm glad we've cleared that up.
There is, however, a speed bump. It's a contributory fact because of consumer spending changes, higher petrol price, you've got energy prices in the go, some of the strike actions contributed. So all of that meant that there's a big demand, a big push to get money from the likes of Able and Capitec. The likelihood of payment has changed, so it's not necessarily a bubble but a speed bump.